Okay, welcome back, everybody. Today is Monday, and we're going to be continuing on reviewing for our midterm exam that'll be on Wednesday. So let's just go ahead and start off here. Let me just tell you a little bit about the format of the exam. So obviously, we're covering chapters 1 through 6. Um, there's going to be 30 multiple choice questions, 5 from each chapter. So not a whole lot from each chapter. So 30 multiple choice, 5 from each chapter, and then there's going to be 6 like short answer type questions, and that's going to be 1 from each chapter. So you'll have roughly a minute per multiple choice question, and then like about 3.5 minutes, give or take, on the short answer. And luckily, with our situation, not having a class coming in right after, if someone needs a few extra minutes after the exam, then I'll give them up till that 11 o'clock time. So technically, I'll give someone an hour if they technically need it, so we'll give a little more. But I will stop at 10 because that is already giving 10 minutes extra than what it really should be. So that's that. But roughly on the 50-minute time stamp, you'd get roughly a minute per multiple choice question, and like I said, a little over 3 minutes per short answer. So chapters 1 through 6, 30 multiple choice questions, 5 from each chapter, 6 short answer type questions, 1 from each chapter. So let's go ahead and just start off. So for chapter 1, let's start with chapter 1 content. Let's see here. So be able to tell me um, what the GASB sets accounting standards for. So be able to tell me what the GASB sets accounting standards for. And I don't know if you want to write any of this stuff down. It's totally up to you. But I'm gonna kind of go through and give you really kind of tell you where to focus your efforts. So, but it's up to you if you want to write because it's recording. So if you want to wait and listen to it, however you want to go about it. So be able to tell me what the GASB sets accounting standards for. Um, what I mean by that is like what type of entities they set standards for. Okay. Um, be, know what type of funds. We have 3 types of funds, right? Governmental, proprietary, and fiduciary funds. Be able to tell me know what type of accounting each fund operates on. So be able to tell me which one, which type of fund, what type of accrual, or my gosh, what type of accounting each fund operates on. So with knowing that, be able to tell me which type of funds needs to be um, reconciled or which one needs to be changed when comparing it for government wide. Um, Still in chapter 1. And in terms of the modified accrual of basis of accounting, be able to tell me when we should recognize expenditures under modified accrual accounting. When should expenditures be recognized? Okay, so we talked a little bit about authoritative literature, about like the codifications and stuff like that. And we had, remember, there's category A and category B. Category A being the highest authoritative guidance that we should, as practitioners, look at when we're looking for guidance on a transaction. So be able to differentiate between category A sources and category B. So be able to, so if I would ask you, um, like for example, what would be an example of a category A gap for state and local governments? You would be able to pick that out. Okay, so just know about the hierarchy differences between category A and category B. Be familiar with what the FASAB, um, their function is. If you recall what that is, the FASAB, which is the Federal Accounting Standards Advisory Board. So be familiar with what their role is within this whole picture here. Um, okay, I'm going to kind of jump around. I'm just going to kind of review chapter by chapter first, and then I'm going to do the short answers last, okay? So now let's go ahead and jump to chapter 2 material. Be familiar with the CAFRE. If you recall, that's the Comprehensive Annual Financial Report. So just really just be familiar on the overview of it, like on how many sections there are, stuff of that sort, what the sections are. Just have a broad knowledge of what the CAFRE is and what it entails. Um, Remember, governmental funds and proprietary funds when preparing the balance sheet or the financial statements. Let's just say it that way when preparing the financial statements. Remember, there's major funds and non-major funds. Be able to tell me what that criteria is for determining that. So know what constitutes a fund being a major fund or a non-major fund. And if you recall, there's a particular formula for that. So just be familiar with knowing what constitute a fund being major or non-major. Okay, we also talked a little bit about component units. Remember when we talked a little bit about sorry, I don't get too far away from the mic. So we talked about component units with governments, and they kind of resemble the same if we think of it in the for-profit sector, the same thing as like a subsidiary to that of a parent. So obviously the parent has to consolidate in the financial statements that of the subsidiary because they have control over it, right? Well, same thing holds true in governmental accounting. So be able to tell me what stipulates or what is the criteria for that a government has to establish in determining whether they should include a component unit, whether a component unit should be included within their financial reports or whether it should not be. So be able to tell me what is the determining criteria or determining factors and whether a government should include a component unit within its financial statements. Um, be able to tell me what makes up the government-wide statement. So, meaning that what are the financial statements that we would expect to see within the government-wide statements? So, be familiar with the government-wide statements and be able to tell me what is included within those statements. Okay, so um, we know that governmental funds operate on the modified accrual basis of accounting, right? We know government-wide statements operate on the accrual basis, right? So there's a little bit of a difference there, right? Um, Main differences between those is really what their measurement focus is, right? Meaning modified's more focused on current, right? The accruals on economic, right? So the full picture. So obviously, on the accrual basis, we know if it's economic resource, they're gonna take into account long-term liabilities and long-term assets like fixed assets and stuff, right? On the accrual basis, but on the modified accrual, they don't, right? So there's a little difference in the reporting types between the government-wide statements and the governmental fund types, right? Because one's on modified, one's on accrual. Be able to tell me what are some items that we would expect to see in the reconciliation between the modified accrual for the governmental fund statements and the government-wide statements on the accrual basis. And if you think about it, just when you're trying to approach this problem, think about what differences would be reported in the two of them. So when you see it on the test, try to think, okay, if I'm reconciling it, obviously there's things that are reported in one that are not in the other. So be able to pick out what things you would expect to see within that reconciliation from modified accrual in the governmental funds to full accrual in the government-wide statements. Understand? Make sense? Okay. Okay. Next, we'll move on to chapter 3. Be able to determine what items would be in the non-spendable fund balance category of the fund balance within the governmental funds. Okay, so we know that within the general fund and major special revenue funds that there are budgets that are set, right? We adopt a budget. Um, so particularly for the general fund, just be able to be familiar with what that entry looks like. Remember, with debit to estimated revenues, debit estimated other financing sources. Remember, credit to appropriations, credit other estimated financing uses and stuff, and then obviously fund balance, right? So be familiar with how a budget's set. So if like if I would just ask a question and asking what would be, like for example, I could ask something like, what would you expect to see as a credit entry in the setting a budget? And we know that would either be an estimated of financing use or an appropriation, right? So we know that. So just be familiar with what that journal entry looks like when we're setting a budget. Remember, we have this closing process that we talk about. And it's operational accounts and stuff of that source. Remember that's going to be closed at year end. So, be able to tell me where we close those accounts to. So, what account do we close these accounts to at year end? So, if I'm asking where we should close these accounts, what account balance or what account do we close it to? Be able to tell me what the appropriations process is. So we know it's part of setting the budget, but what exactly is the appropriations process? So be familiar with the appropriations process. Okay, and once again, we're still in chapter 3 here. We're concerned with the budget here. If I throw you out some numbers within that budget with some accounts that are within the budget, so like estimated revenues or appropriations, whatever they might be, if I give you some numbers on some estimated revenues, maybe I'll give you what estimated revenues are and maybe whatever estimated other financing uses are, or whatever. Be able to tell me, just be able to decipher between that entry, like tell me what a fund balance would be, or what a missing element would be. If I give you certain elements of a balance, be able to plug in what's missing. If I give you that, so really just be familiar with the chart with the budget. Okay. Um, so let's move on to chapter 4 next. Okay, so be familiar with special revenue funds. Remember, Gatsby put a little more extra attention to the special revenue funds. So just be able to tell me a little bit about special revenue funds and what I mean, um, like the main purpose of what they're for. Um, so yeah, just be able to tell me what the main purpose of a special revenue fund is. Be able to tell me what a interfund transaction is. So be able to tell me what an interfund transaction is. Okay. Still in chapter 4. Under modified accrual basis of accounting, um, know what the rule for measurable and available is. So for recognizing revenues. So be able to tell me when what constitutes something, whether it should be available in the period or if it should be deferred inflows for the next period. So there's some type of a formula or some type of a thing I'm looking for, whether it's going to be available or not available in the current period. Um, okay, another thing we have requirements. If you remember, there's like conditions When people come like pledge money or something, like say for example, it could be like a characteristic. When we went back to that scholarship characteristics, if you're not a minority within the age 20 to 40 or whatever it might be, that's characteristics. Another one would be timing, the period they want you to spend it, either 2020 or 2021, whatever year it might be. Some were based on other ones was based upon you had to make an expense first. Remember, you had to make the expense before you could count it as revenue. Some had a conditional. Remember, it was based upon a condition where, like, say if obviously I'm gonna give. Remember, I said about the parking lots. If I give you 100,000, I'm gonna give you 100,000. It's gonna be conditional based upon you raising 100,000. So if we're talking about like these conditions, like characteristics of um, of different types of money coming in, right? When we can recognize it. So if let's say I'm making a conditional pledge to your government, and I say, hey, I'm going to make that $100,000 pledge, and the date that I come to you and say, hey, I'm going to pledge you this $100,000, how should you account for that at year end? Say if it's not, you all haven't fulfilled your obligation of this other thing. So how should that be accounted for at the time when the donor makes that pledge saying, hey, I'll give you this if you match it. Okay, so be familiar with those characteristics of the time restriction, cost reimbursement, and stuff of that sort. So and know the rules for when an entry should be made, how to account for it. Obviously, like I said, cost reimbursement. In order to be able to count the revenue, we have to incur the cost first, right? So if you think about it conditional, just really think about it. Like obviously, if it's cost reimbursed, we have to spend money first. If it's conditional based upon something, obviously we should probably have to do something in order to even be able to account for it, right? So just food for thought there. So just know the different characteristics when people pledge money or donate money of how a government should account for it and when they should account for it. Does it make sense? Okay, when we levy a property tax, like so when we're recording a property tax levy, right? We usually have to set up an allowance, right? Because we know not all taxes are going to be collected because some people, for whatever reason, aren't going to pay their taxes. They might move, whatever it might be. So we know we set up an uncollectible account. Um, that's also true with just your basic trade receivables for your for-profit sector of accounting. You're going to set up an allowance for doubtful accounts when you have your AR, right? So that way they're carried at net realizable value. So back to dealing with property taxes. When we levy a property tax and we set up that uncollectible, what does that do? Like as far as how is that accounted for in there? What's its function in doing that? It reduces because when think about when you make that journal entry, you debit taxes receivable, you credit the allowance, and then you also credit something else, right? Which is the revenue because we've earned it because it's on the accrual. It's modified accrual, but we've earned it. So what does that allowance in effect do? If we're counting it as a revenue, what does that allowance in effect do?
It's lowering revenue.
Right. So just be familiar with what that uncollectible account, what function it plays in that entry. Okay. Okay. Chapter 5. Be familiar with what type of funds typically record budgets. So be familiar with what type of funds record budgets. Be familiar with a capital project fund. So like the main purpose of it, how long a fund is supposed to last for, that sort of thing. So capital projects funds, like what they're for, the life of the fund. Um, okay. Be familiar with debt service funds, what their main function is for, and what type of activity is usually accounted for within a debt service fund. Be able to tell me what type of projects you would expect to see being accounted for within a capital projects fund. So if I gave you a list of some projects, be able to identify what type of a project we would expect to see within a capital project fund. We talked about bonds, term bonds, serial bonds, stuff of that sort. So just or a deferred serial bond, be able to decipher the difference between those three types of bonds. So meaning obviously that when payment would be due. Obviously term bonds, we know term bonds are due usually at the end of the term, like say 30 years or whatever. Serial bonds, we know those have just different dates in which like different series of payments, right, for serial bonds. Deferred serial bonds, we know that the payment obviously it's deferred serial bonds, so that first payment is going to be deferred usually, so we can bring property tax in. So just be familiar with the different types of bonds. Next, let's go ahead and jump into chapter 6. Okay, so know what the categories of net position for a proprietary fund are. So remember, net position for proprietary funds have different categories. Be able to tell me what those three categories of net position are for proprietary funds. Okay. So and the next thing, dealing with proprietary funds, um, in terms of their financial statements, proprietary funds are the only type of funds that require a statement of cash flows, right? So with requiring a statement of cash flows, there's a certain part of it. We know we have the four sections of it, but there's also a reconciliation, right? So be able to tell me what that statement of cash flows has to reconcile to within proprietary funds. So there's a requirement. You need to be able to tell me why we need to reconcile that statement of cash flows and what it's reconciled to. Okay? Does this make sense? Remember we talked a little bit about when governments operate landfills, particularly as enterprise funds. Because remember they said we had a little bit of an option. We could do it general fund or enterprise fund. Let's say we're doing it in the enterprise fund. Okay. Um, So if we're accounting for operating a landfill as an enterprise fund, to be able to tell me what GASB says we have to do within the life of operating that solid waste landfill. If you remember, it deals with post-closure costs. I'll give you a hint. So just know what GASB says about how we need to account for post-closure costs with landfills. Okay. Okay, so we also found out when we were talking about proprietary funds that sometimes GASB requires us to have an enterprise fund. Remember, there's some situations in which GASB will make sure that we have to have an enterprise fund, and there's other times when we have the choice of using an enterprise fund. So be able to tell me what some of the things are that would require what that GASB would require us to have an enterprise fund. So what type of events would require a government to have an enterprise fund? Also, be familiar with what type of financial statements accompany proprietary funds. So, what type of financial statements accompany proprietary funds? Okay, so for short answer questions, so that's a guidance on where to put your efforts on for multiple choice. So next, let's talk on the short answers. I'm not going to I'm not going to give a clue of what chapter. I'm just going to kind of give an idea of what I'm going to be looking for in them. So be familiar with we know we have different fund categories, right? We have three different fund categories: governmental, proprietary, and fiduciary. Okay, so be familiar with all three of those different funds. Know what funds make up each of those funds, and be able to tell me. Be familiar with what type of basis of accounting each of those funds use. So you just pretty much be familiar with all 11 funds, which are categorized by three different categories, right? With five governmental, two proprietary, four fiduciary. So be able to tell me the different types of funds, the funds that make up each type, and the basis of accounting that's relative to each one. Be familiar with the five categories of fund balance within the governmental funds. The governmental fund balance sheet. So be familiar with the five categories of fund balance. So be able to tell me in regards of modified accrual accounting, just the revenue and expenditure cycle, when revenues are recognized and and um, and when expenditures are recognized, and particularly be able to describe to me the how we levy like a property tax, like when the recognition of property tax, like what constitutes it from being available or not. So just be able to tell me pretty much explain to me how modified accrual works in regards to recognition of revenues and expenditures. Okay, if you recall, we looked at a chart, and it was directly out of the book. It was one of those days we were doing journal entries and stuff that it had the different type of funds. Um, had the fund name, and dealing with governmental funds had the fund name, and then it told um, what type of accounting basis it was on, whether it records budgets, encumbrances, the life of it, and all that stuff. So just be familiar with the governmental funds, those five governmental funds, like which ones record encumbrances, which ones use modified accrual, which ones records budgets. Stuff of that sort. The life of it, we know capital projects is usually for the duration of the project. It's usually shut down. So stuff of that sort. If I ask you some questions on that, be able to tell me, you know, give me some details about each of those accounts of what properties are attached to each of them or what functions that are used by them. Also, be able to tell me the differences between GASB's statement of cash flows and FASB's. So be able to point out the main differences to it and explain it to me. So just explain the differences between GASB and FASB statements of and for their standards that apply to the statement of cash flows. So be able to tell me the differences there. Okay, and then there's going to be there will be one problem on here to where you're going to be given a set of data, and it's going to relate to a general fund. So data that it's probably going to set maybe might expect to see something like, and it won't be anything difficult. I mean, it should if we've done a lot of practice on journal entries, but it's going to be some raw data, and you're going to be asked to journalize it. So expect this maybe see something of the sort of maybe setting a budget. Maybe going through the expenditure cycle, meaning set up encumbrances, reversing encumbrances, incurring the liability, um, maybe receiving taxes. So how do we receive taxes after they've been levied? It might be reversing revenue from counting it as we originally counted it as revenue. Now we realize it's not going to be available, so we have to make it a deferred inflow. So there will be a problem on there where you have some raw data and you need to decipher it and put it in journal entry form of how you would expect to see it. Calculations would be very simple if they're in there. So when maybe applying a basic percentage, if we have to, like if we levy a property tax or something, be able to set up the uncollectible taxes. So be familiar with that. If I give you some raw data, be able to decipher it. And like I said, a good example would be maybe levying property taxes or setting a budget or recording an encumbrance or something like that. So that's the review and in depth. Hopefully that helps. Let you all focus your efforts. I know it's still going to be a tough exam, so just remember, midterm exam chapters 1 through 6 Wednesday. It's in class. The students that have not been in class because it's a hybrid, they have to come to class. So no excuse. You have to be here Wednesday to take the exam. So the exam is going to be Wednesday at 10 o'clock, 10 to 10:50. And like I said, I'll let you run over a little bit if you have to. In Mahood, room 207, so there's no excuse on missing the exam. Once again, it's on chapters 1 through 6, 30 multiple choice, 5 from each chapter. And then there's going to be 6 short answer, maybe 1 problem, like I said, with some raw data. And each of those is pulled 1 from each chapter. So I don't think it should be too bad. I think if you've paid attention, you've been studying and doing your homework and stuff, it should be a pretty decent test. And I feel like I've helped, focus your efforts on what I think is important without making it too cumbersome. So now what I want to do is we still have like 7 minutes. I want to just ask if there any last questions or anything of any particular concern we want to discuss prior to ending the review.
Would it be possible to go over the 10-5 rule?
The 10-5 rule? Yeah, that's fine. That would be totally fine. Okay, so the 10-5 rule was the question, meaning if we're gonna determine whether a fund is a major fund or a non-major fund, right? So governmental funds are considered to be a major fund when total assets, liabilities, revenues, or expenditures of that individual government fund constitutes 10% of the total for the governmental fund category, right? So what are we saying? So there's one fund. Let's just say we're talking about a special revenue fund. Let's just say, for example, we're going to use a special revenue fund. So if the total assets, liabilities, revenues, or expenditures of that special revenue fund, if all those added together, if they're 10% of the total for the governmental fund category, so remember we have the total governmental fund category, right? So if all the elements of that fund is 10% of that fund, right, of the total governmental fund category, that's the first step, right? So it's all those elements: assets, liabilities, revenues, expenses. If they're 10% of the total column of the governmental funds, that's the first step to the test. Not bad, right? Pretty much all elements. So pretty much just saying if the funds elements account for 10% of all governmental funds. So you mean if there's $100,000 of governmental funds, if all those elements make up 10,000 or more, then it's that the first step of the process has been met, right? But there's 2 parts. Obviously, the next is the 5. That's the 10% part, right? And then governmental funds are considered to be major when total assets, liabilities, revenues, or expenditures of that individual governmental or enterprise fund are equal to 5% of total governmental and enterprise categories combined. So it's pretty easy. I know it sounds like a lot. Just think first, like 10% of the governmental fund total. If your elements, revenues, expenses, liabilities, assets is 10% of it, okay, we move on to the 5%. Then same elements, just think of the same thing. Assets, liabilities, revenues, expenditures of the same fund. So we're looking at the same fund, right? But now we're saying, are they 5% of total governmental and categories combined? Governmental and enterprise categories, I'm sorry. So combined. So if we take the enterprise categories and governmental categories and combine them, if it makes up 5%, then it's major, right? So 10-5, that's easy. For a hint, I'm not gonna have any numerical to that. So if you know the formula, you're gonna be good. So don't like beat yourself over the head trying to like go through all these examples numerically. Like if I'm gonna give you that, I will give you that clue. So if you know the formula, you're good. Just know it's 10-5 and know that the 5 applies to enterprise and governmental. The 10 is just governmental. So just know we're talking about an in particular fund, right? Or we're talking about a particular fund, and the 10 is that fund's elements, right? Assets, liabilities, whatever. 10% of governmental. If it meets that, then we do 5% of enterprise and governmental of the same fund. Pretty simple, right? Does that help?
Yeah.
Okay. And I know if we, maybe later on in the semester we'll get through and do some examples, but for right now I'm not concerned with that. I'm more concerned with the theory of it. Okay. So that does make sense.
Yeah.
Okay. Any other questions?
I'm good.
You think you're good to go? Okay. You feel pretty comfortable with it? Okay. Yeah, I don't think it should be too bad. I really don't. I think if you've been doing your stuff, which you have been, and you go through the study guide, I think you'll be all right. And like I said, this will be recorded, so it'll be on here if you need to play it back and listen to it. And like I said, it just really stick to what I told you. I mean, I'm trying to point it out as much as I can. But that being said, it's still hard content. I know it is. But you can do you all can do it. You can do well on it. I know you will. Just put your time in and study, and I think you'll be happy with the results. But definitely pay attention with the data that I gave you today. It definitely will help out come Wednesday. So if that's it, then that's all I have for everyone. Good luck studying, and if you have any last questions, just shoot me an email, and I'll be happy to help you. I'm in my office till 4 today. If anyone needs any last minute things, if not, I'll see everyone on Wednesday at 10 o'clock. And you don't once again just a piece of paper and a calculator is all you'll need. You don't need a Scantron or any of that stuff. So just something to write with and a calculator. So we should be good from that. But thank you for your time, everyone, and I will see everyone on Wednesday, and good luck studying for your midterm.